What's up, everybody? It is July 21st, Thursday, 7:30 p.m. Eastern Time. Time for the market analysis video. So it was an interesting day. We had the ECB meeting in the morning with Mario Draghi, little statement and Q&A, and then the markets, of course. So the SPY ended down on the day. It went briefly under 15, or excuse me, under 16. So in the 215, around 80s, 70s for a little while, but that managed to rally in the PM after 3 o'clock. It rallied into the close to close at around 216.30 or 216.26. So the little rounding off that I've been talking about as seeing a market sell-off coming could possibly be here. Doesn't have to be. I can definitely be wrong. But we saw a pop on Wednesday, and then it sold off here today on Thursday. So I would expect a little bit of a push downward after this precipitous rally here. So it'll be interesting to see if that does indeed occur. So similarly, gold was an interesting story there. So after basically I mentioned that what was beginning to form looked like a little bit of a bearish flag, where kind of this up-tilting tight wedge basically is a bear flag, and then that was followed off. Apparently, that didn't indicate some selling because it sold off in the PM or in the early AM. I don't know which really. And then opened much lower, but then the 125 area was defended pretty heavily, and then today, post the ECB decision, we saw just a constant steady rise to close up above the 127 area. So this could have been the final leg of the correction, this blow off down to 125, and then this rising bar here today. This could be the end of the correction in gold, this minor little correction in gold here, and could be setting up the next leg higher here, which could take us to 130. Well, let's see. Could take us to 134, which I believe is what I've been taught. What I was talking about as I still saw the forecast for the end of August with this kind of measured move here from the previous push. Here, I believe it makes sense that around it would go to 134 in gold. If it was a measured move, again, fundamental analysis, so that takes us all the way to 136. It depends on where you measure the bottom. But fundamental analysis, obviously gold has, I believe, a very bullish fundamentals for the future, considering all the negative interest rates, so I don't want to harp on that too much. But it looks like possibly the near-term bottom could be in for gold, and so it could be time to add to your position. This would be a nice dip buying opportunity. I wasn't sure. I thought it could possibly go to 124. Looks like that 125 area was defended very successfully. So I have been talking about the 127 and 125 area being a strong area of support, and it looks like the market wasn't able to take it below that point for gold. So I think higher prices for gold are in order. Looking at oil, so we saw a little bit of a rally after oil went down to $45 a barrel and a little bit lower, but now we're back down there again. So this sell-off is continuing, which in light of the gold rally and the oil sell-off, that makes me think that kind of is an indication that this was a risk-off day. So with gold being considered a safe haven and oil being a economic play, so higher oil generally means higher demand, which means a better economy, or a better economy means better demand for oil, which would make oil prices go up. That works. That's just another way of saying it. But they're both dollar price commodities. So so based on the price of the dollar, they could go up together. But if they trade in opposite directions, generally, if gold is going up and oil is going down, that means risk aversion. If oil is going up, gold's going down, that indicates risk on, or risky assets being accumulated with the idea that growth is going to happen and push the stock market higher. So even though we didn't get a large down day, or what would be considered a volatile down day, like some of these days back at the beginning of the year, or even back here in June, it could be the start of something to come. We'll have to watch prices and see where we go from here. We did have jobs data that was better than expected. I believe there was some manufacturing data that was worse than expected, so it'll be interesting to see what the market takes to heart. With all that being said, the US dollar, after breaking out, seems to want to test the previous breakout area here. So if we look at this area here, it was able to successfully break out, went a little bit higher, and now it's went back down. So that's an indication that we just want to test that again, and possibly an indication that the dollar isn't necessarily as fundamentally strong in its future. Or another way of saying that, a more clear way of saying that, is possibly the Fed is going to devalue the currency somewhat. You cut rates, or the forecast for rate hikes versus rate cuts, and the interest rate in comparison to other currencies maybe isn't as strong as it was. Or it could just be an exhaustion, a little bit of a downtrend day before moving higher. Time will tell on that. But we're still obviously in an uptrend for the US dollar, so gold moving along with that in spite of the dollar bullishness is also a trait of risk aversion. So if the dollar and gold are going up at the same time, that generally means risk aversion, or moving into safe havens and a more defensive position where you want to protect your wealth versus risk it for growth and risk it to gain. So that's all interesting stuff. If we look at the airlines, so Delta, which I believe reported, it obviously fell off the 50-day moving average, and so if this were a trend that we're going to continue, I believe this was also based on Southwest. Yeah, that's right. Southwest reported a miss, which I don't believe happens very often with Southwest. Southwest, I think, is one of the more quality airlines, if I remember correctly. So if this were to continue, obviously the trend in transportation would not paint a bullish picture for the stock market in general. We'll have to see where the bleeding stops, but I think a correction for the larger indexes or indices is in order. If we look at the financials, treading water also, similar actually chart to the US dollar, which makes sense because interest rate yields for the US dollar are very important to financials as well as to the US dollar in general. So it would make sense that those charts would appear similar, all other things being equal. So with that being said, a couple other interesting stocks of note. So Herbalife this week received some news that the FTC basically cleared them from saying that they're a Ponzi scheme. I think levied some fines and made some restrictions on their business model, but and then I believe Ackman came out and said we're still short, blah blah blah. I don't know how how familiar you guys are all with the story, but it's been a 4 or 5 year long storyline between Ackman, Carl Icahn, and this Herbalife, and whether it's a Ponzi scheme, whether the Justice Department or the Federal Trade Commission or whoever will try to shut it down or whatever. It looks like Herbalife may be out of the woods as far as litigation. What that changes to their business model and the reputation that they've gained from all of this, time will tell. But it popped back up to the highs. I can see it if the smoke is beginning to clear here. I can see it becoming more investable from a whether from the hedge fund perspective, mutual fund perspective, etc. If the dust settles here a little bit, I can see people coming in and accumulating the stock where they were before. They were basically unable to put in on a long position because of the overhang of this of some investigations and all the back and forth between these activist investors. So you could see an uptrend. That's my bias on Herbalife, but that could be medium to long term. Another interesting story is Yahoo. So they've came out with their earnings release, but above all of that, they closed their third round of bidding for Yahoo's core business, and sometime either I would expect next week. I think that's the word on the street, is that next week they will be announcing the bids, or their choice for the bids, and what that would be and what that would amount to in a dollar per share scenario. So that's also very interesting. That could definitely send the stock price higher. I would guess over $40 a share, which is why we have this rising situation here as more information came out about who the bidders potentially were, and who the buyers could be, and what the price could be. So it'll be interesting to see that. I think could be worth a flyer as far as a long call option position, betting that this goes to 42 or something like that, 45 even possibly dollars a share, based on an announcement next week, August. It's really hard to tell with these, but it might be worth a more investigation, and possibly putting a long call situation where you're getting maybe 3-to-1 on your money if you're right, or more. I think that could be worth a shot. Do the research yourself, but could be worth something. So that's as far as M&A. A couple other stocks, Hasbro. So they reported earnings, and obviously a little bit of a disappointment. I believe they didn't get the Jurassic World contract or something. So it'll be interesting to see if Mattel gains off of Hasbro's pain. Hasbro's pain is Mattel's gain. So that's something to keep an eye on if you're interested in those kinds of storylines. These are all kind of interesting fundamental storylines that you could go with, and different investing ideas. So if nothing else, these are kind of examples of what you can look into if you're not necessarily into technicals but want to trade storylines. Doing this kind of research and looking at Hasbro's contracts and Mattel's contracts and trying to guess what's going on there, and where the rotation will be. Obviously, since Mattel has already reported earnings, should be interesting. But with all that being said, hopefully I'll have some trades as more frequently as earnings season winds down, and as I continue to tweak some of my strategies and get them to more consistently produce trades. Right now, I think I made some changes that kind of made it take a break here this July, so it'll be interesting to get it back up and running, and have some trades for you, and trade some charts for you in the very, very near future. With all that being said, subscribe to me on YouTube, follow me on Twitter at StockTwits, at TradeKraken, TradeKraken. God bless, good luck. Great trading.